What's going on, guys? Today we're going to be discussing the multi-grid chart layout, and this layout is the one that I'm using to be active in day trades. So I'm going to break it down, and I'm also going to share the layout with you so you can just plug and play and use it on the Thinkorswim platform. If you don't have Thinkorswim, you can set this up similarly on whatever brokerage you use. And I do recommend, if you're day trading, to have multiple time frames in your view, and we're going to take a look at why that's important in this video. All right, so generally how I use this is the 4 top grids I use for the longer term time frames. For example, on the top left, I have a monthly chart. Here I have a weekly chart, a daily, and a 4-hour. Then I drop down into my intraday time frames, a 1 hour, a 30-minute, a 15-minute, and a 5-minute. Now, if you're looking to day trade, you are going to be putting yourself at a disadvantage if you're only looking at one chart at one time. So if you only have a 15-minute chart up or a 5-minute chart up, you're going to be at a disadvantage because you're not able to see the full picture of what price is doing. So this video, we're going to talk a little bit about how to use each time frame and how to line them up so that when all of them are showing something similar, you have a higher probability for your trade. We're going to ignore the monthly here for a moment, and we're going to also ignore the weekly here for a moment as well. Let's look into the daily here. So we have a daily chart right here, and I'm going to blow this up, make this a little bigger look in here. And so one of the trade ideas for Friday, which was the last trading day of the year, was a short on Facebook below its day lows on Thursday. So the day low on Thursday was 343.22, which is highlighted here by my cursor. Now, if you notice, when I move my cursor, you can see the crosshairs are moving around on all the other time frames in the charts below and to the right and to the left, right? So you see that kind of moving around. This becomes helpful when you're trying to map out levels in an intraday trade or just have an idea of where it lines up on every chart. So the entry idea was a short position under the 343.22 level with a first price target of 341.64, which is the previous day low, and then a secondary price target of the opening of this big green candle, which was 338.85, and then potentially the low, which is 338.01. There's also a gap here between this trading day and this trading day, which was a Monday to Friday. So that gap also was a potential zone that price can head towards. Now, on the daily chart, we saw, if we look at the daily here, this is the low, 343. And if you look down at the 5-minute chart over here, right at the open of the day, Facebook's first 5-minute candle flashed down to 341.69. So for me, I wasn't expecting that move to happen right away. And as that happened, I kind of took my eye off of the trade because I didn't really feel comfortable chasing it. Now, probably should have stuck with it because this gave us some additional downside signals. But, you know, it is what it is. At the end of the day, we ended up at a low of 336 and change. So why having multiple times in your view is important is that you can see, okay, we're currently below the previous day low. Now, what does that mean on the 4-hour chart? So you can look at the 4-hour chart and you can say, okay, we're now below 1, 2, 3, 4, 5, 6, 7 4-hour candles. We are trading below, so the bias is to the downside on the 4-hour chart. Then you can look over at the 1-hour chart and you can break it down similarly and say, okay, we're now trading below you know, however many hourly candles. If you're shorting something, then you want to see a continuation of lower lows on an hourly chart, because that shows that the trend is still moving down. So if we kind of zoom in here to the hourly chart, you can see that we had lower highs on the hourly. So this high is lower than this high. This high is lower than this high, etc. And it keeps going down. And here you're making lower lows along the way, except for here, it starts to get into a range here until it finally breaks that range, and then you see a lot of sell pressure kicking in. That was the final hour of the day. So when you have these multiple time frames, then you can look and say, okay, what's the half hour doing? So the half hour is consolidating in this area, and then you start to see a break of these lows that we're holding, and that led to the sell pressure. Same thing with the 15-minute chart. You can start to look at what's the 15-minute chart doing, and then you can narrow it down to the 5-minute chart. But all of this starts off with either the weekly chart, the monthly chart, the daily chart. When you can have multiple time frames that are telling you a similar story, then that increases your conviction in the trade. Right off the bat, knowing that we were breaking below the previous day lows, then you do have a bearish bias for that day. Knowing that we had a price gap below also increases that potential to revisit that zone there. So there was multiple pieces to this trade that was showing high conviction, and unfortunately I put the trade idea out. I didn't take it, but it's all good. These are things that you can learn from, and you can develop, and you can say, okay, why didn't I trade it? Was my mindset not in the right place? Was I fearful of taking a loss? Had I just taken a loss before, which caused me to hesitate on the trade? Things like that can kind of throw you off. But having these multiple time frames will really help to keep you out of trouble when you're trading, especially when you're day trading. Because again, having a view of everything that's going on each time frame is going to help you make a decision, and make a better decision, especially when price is moving fast or when price is still consolidating in a range. Had we not broken this low, then it would have just been kind of waiting and seeing what that price was going to do. We basically didn't wait any time, and it broke right away, and that led to selling throughout the entire day. In addition to the indexes took a little bit of a breather as well. So you can set this up on your own brokerage. I encourage you to do so if you don't use Thinkorswim. You can change this to your liking. So you can say, hey, I don't want to see a 15-minute chart. So you can make, the 2-minute chart your lowest time frame, and then you could move to a 5-minute here, and then maybe just keep the half hour there. So you can customize this to your liking, but I like to have my intraday time frames down at the bottom and my longer term time frames at the top, so that I can have perspective on what price is doing on the longer time frames. A lot of times we'll get caught up in a move that doesn't do anything because it hasn't really broken any price level ranges. For example, before we end this video here, from this day on 12/29, the following day had an inside candle. So when you have an inside candle, there's no real direction. It's not breaking above the highs of the day. It's not breaking below the lows of the day. So if you're trying to trade this in between, then you're probably going to get a bit faked out, and you're not going to get a true sustained direction. Whereas when you break above previous highs, for example, from this Monday to Friday, you had direction. Or here, when you broke the previous low, you had some direction to the downside. So these are things that you want to keep in mind. In this case, Facebook did break above previous week's high. It hit a resistance level here, which you can see that it kind of slowed down over this 352, 353 area, and then it reversed. Now, you could have seen signs of that here on the daily chart. So you can see that the daily was starting to show some signs of selling pressure in that zone. So these are ways that I like to use multiple time frames to give me a better edge on my trades. I do have some videos of live trades that you can take a look at as well of how I'm using that in a real-time environment.